Right, hello everybody and welcome to episode 4 of my weekly update and Q&A. My name is Mads, a property developer with over 150 million in completed projects. I build super homes around the world for billionaires and royal families, and here at home in the UK, I've started a passion project to build a 100-unit property portfolio from scratch, using none of my own money to prove that anybody can do it. In this video series, I start every video by answering your questions about property development and investment. So if you've got one, please drop it in the comments below. Then I'll share a challenge or something big from the week that we faced in one of our developments and how we overcame it. Today, I'm talking about the glorious refinancing of my Copenhagen development and delivering a £250,000 return, which is a 100% return on the capital invested in just 6 months. And it's a dead simple development project. So after that, I'll hop into the 100-unit challenge, give a quick update on where we are there. Look, if you're new here, I started in a branded yellow Volkswagen Beetle selling buy-to-lets in London. 25 years later, I am a pretty experienced property developer delivering global trophy homes, and now I'm sharing everything I've learned along the way. This series is about giving you unprecedented access to the usually secretive world of high-end development and showing you, deal by deal, how to build a property portfolio from zero. So whether you're starting out or getting ready to scale, these strategies apply. Okay, cool, let's hop onto the questions. So every week I answer questions from the last week's video. And if I go over here, I can see this is last week's video where I talked about exchanging contracts on one of our 100-unit challenge projects without having bank financing in place, about taking risks. And we got one comment from Stefano. Excellent breakdown. I'd be very interested in seeing more deep dives on deal structuring and practical frameworks. I mean, it's a great question, and deal structuring is the name of the game. It's what it is all about. You know, as a developer, you have a creative vision. You're essentially taking something and turning it into something else. And, you know, in between those two markers, you've got to solve a million problems and overcome a million different hurdles and obstacles and whatever to get there. But ultimately, it's a creative vision about how you can take this from here to there. And the deal structuring element comes into, it's not just deal structuring, it doesn't just come down into financing and how you get, what's your loan to value and what's your capital stack, etc. It also comes down into how are you going to manage the tenants, how are you going to deal with the commercial element of the property if it's got one, how are you going to deal with the fact if you've brought investors on board but your lender doesn't accept second charges on the loan. So you have to find a way around that. There are multitude issues of deal structuring, and there's no right or wrong answer. It's whatever it takes to get the deal done and get it done sensibly. I'll definitely go into detail about how we did that on our latest 100-unit challenge acquisition, probably next week, Stefan, mate. So thank you very much for the question. I will get cracking with that. Okay, cool. So let's get into the meat and veg of this video, which is the Copenhagen development. So 6 months ago, back in May of this year, 2025, we purchased a detached house in a suburb, a nice suburb of Copenhagen. All the boxes were ticked. I mean, it was a large site. The site itself was 1,200 square meters. And in Denmark, you're allowed to build on 25% of that of the site, and that's also the rule in many other European countries, actually. So I knew it has potential for extending and whatever, but it also had a lot of lateral space. And when you've got a house with a lot of lateral space, it means it's much easier to reconfigure. If you compare that, for example, to a townhouse, you know, where you have different levels, there's only so much you can do and so much you can alter before it becomes impractical. When you have lateral space, it allows you to really move things around, to modernize and really just do whatever you think adds value. Like what makes it a nicer house to live in. So we're happy with that, but man, the house was absolutely trashed. The people who lived there before hadn't done anything for years. Location wise, it was great. You know, it was upmarket suburb, but probably the sort of the cheapest part of an upmarket suburb, but close to transport, close to great schools. So we initially agreed to purchase the house at 8.25 million Danish crowns, which is about £900,000. During the buying process, we had a few key surveys done, and they picked up a few issues. So we renegotiated the price down about £30,000, something along those lines, can't quite remember. And we also negotiate a delayed completion, but with full access to start the work in the house earlier on May the 1st. So actually we got permission to access the house and do the work 4 months before we completed. You can actually agree that with the seller. Typically, if the house, it's only really going to work if the house is in great condition, it's in poor condition, because if it's in great condition and you strip it out and then you don't complete, there's going to be a big issue. But we managed to negotiate that, which meant that we could start work on May the 1st, 4 months before completion, meaning, May, June, July, 3 months before completion. But that essentially saved us about £15,000, as in 3 months of mortgage payment. So, paid for a new bathroom. The house itself had a few easy wins. We took down a few walls, we opened the ceiling, we opened up the ceiling and saw there was a pitched roof above it. Not the biggest pitch, maybe half a meter, but by removing the drop ceiling and opening up the pitch, it completely changed, revealed the old beams, completely changed the feel of the living space. And we used a few other sort of good but clever design tricks to cost effectively increase the value of the house. It actually increased the desirability of the house, which obviously increases the value of the house. And a big attraction of the house was the huge garden. It wasn't just big, but it was also very mature. The previous owners had clearly invested a fortune in it. Now, developers often underestimate how expensive it can be to properly landscape a decent sized garden. And they also underestimate the intrinsic value of a beautiful garden. 5 months after the work started, we were done. And we'd spent in total about £150,000 on the refurbishment works. And now comes the best bit. We're going to keep this house for personal use, but I wanted to extract as much of the capital that we'd spent on the project. We had the house valued by 2 banks, and both came back at 11.5 million Danish crowns, which is about 1.23 million pounds. So, we bought it for about 900k pounds. We spent about 150k on it, and now it's worth a little over 12.2 million pounds. This meant that we increased the value of the property by 250,000 pounds in just 6 months. 5 months worth of work and 1 month of refinance. Now, when we bought the house and funded the refurb, that was about 250k in total that we spent. That meant making a profit of 250 is 100% return on invested capital in just 6 months. And the refinance allowed us to lock in a great interest rate on a desirable asset, but at a sensible leverage of only 65%, whilst also managing to get out about 75% of the money that we spent on the project. And remember, this is totally tax-free because it's debt. It's essentially money that you spent that you're getting lent back in the form of a mortgage. So now we have a beautiful house and enough money back to go out and do another project. The financing game is a beautiful thing if you know how. Debt is a beautiful thing, but you've got to do it right. All right, let's do a quick review of the 100-unit challenge pipeline. Right, so here we have the lists. I mean, when I go over this every week, there's not that much changes, so bear with me. But here we have the 4 projects that are in our pipeline at the moment, and we are out viewing a lot at the moment, actually, to get a few more, but I'm struggling a little bit to find the time to do it. So we have our site in Tedworth in Surrey. We are on our 3rd round of planning. Don't forget, everything here started on the 1st of January of this year. So this is all from a complete standing start. We're on our 3rd round of planning. We've just submitted an appeal. I just managed to get the unilateral undertaking signed by the sellers and by the mortgage providers. So that's gone in as part of the appeal, and we submitted another planning application as part of it. So we're running a planning application and an appeal concurrently. Basically, a strategy to see what we can get the council to agree to, because the planning application we submitted is essentially exactly what they are asking for. We've addressed all their concerns. So with the appeal running for the last application at the same time, hopefully it'll motivate them to think, well, we'll accept that one rather than waiting for the appeal decision to come back and then we don't get quite everything that we wanted. It's a theory and it's a strategy, and we'll wait and see whether it works out. And then down in Reigate in Surrey, we've got our big site down there that we're looking to get permission for, ideally for 2 big houses at the front of the site, whilst we get permission for another house at the back of the site, which is for the existing owners to move into. We had a first pre-app, and the planners said they actually wanted us to do 1 massive house rather than 2 houses, which I thought was bizarre. And I argued surely it would be better to have 2 4,000 square foot family houses than 1 7,000 square foot whopper. But their response was that it doesn't really matter because neither of them are affordable. So they wanted to match the other whoppers on the street. I'm not quite sure I agree with that, but we've just gone round and submitted another round of pre-app because we want them to be on board with whatever we're going to pursue in planning. So our pre-app that we're going back, the second round of pre-app, we'll talk more about 1 large house, but then what if we do an internal split on it? So that's what we're looking into at the moment. And then the big news this week is that we have exchanged contracts on our property in Deal. This is a commercial building, which has got a commercial tenant in place where the lease is just about to run out. It's a Boots. It's actually a Boots Opticians. And we are going to renegotiate the terms of the lease with Boots, which is going to hopefully free up the upper floors, which we will then convert into office or something else in due course. And then there's a planning gain on this site as well. This has been this in terms of deal structuring was very fiddly and tricky, and I'll definitely go into that in a deep dive next week, or the week after, soon anyways. But lovely deal. We get that, the deal and deal we're calling it, and that again would be 100% return on capital in a few years, and then we'll refinance, and I think we'll probably hold that long term. I don't know why I'm so fond of it, but it's a lovely little bit of real estate. And then we have our mixed use block down in Newbury, which we are pretty much at the point of exchange. We're just dealing with some lenders' inquiries at the moment. We have some obstacles we need to get over on that one as well, which I need to resolve this week. There will be a lot more talk about this one coming up soon, but this is a biggie. We're buying it for 1.05 million. It's 8 units. We believe we can take it to 14 units, but I need to be careful. You don't know what's happening out there, and you always need to make sure that you've covered off every eventuality and that you have a plan B. Yeah, that's a whole video on that one. Right, so let's see what's happening. Let's do some quick stats. New investors on the mailing list this week. I don't think I've had any new investors contact. I haven't really done that much posting this week. But if you're interested in joining our mailing list and being investing with us alongside us on one of our projects, just on Instagram, just DM me invest. I'll ask you a few questions and I'll send you the detail and you can get on the mailing list. And then when we have a new project, we'll mail it out and you can see if it's something you're interested in or not. Mentoring, that's something I'm going to start doing in November. I haven't started promoting that or offering that out to anybody yet, but that's coming soon. Right, let's just do a few social media stats. It's quite important that because I get most of my business through this way, including the job that we're doing in Portugal. 5,207 followers, so I've lost 2 followers. I wonder what I did. LinkedIn followers, great professional network, great for finding investors. Okay, that's jumped to 3,222. Right. And YouTube subs. Again, what is that at? 130. So 2 lovely individuals have joined us on this journey to build a 100-unit challenge. Right, so this is last week's stats. What's coming up this week? Right. Well, I've refinanced. Had a lovely week in Mallorca last week with the family. I've refinanced the Copenhagen project. This week I need to I need to finalize the funding for deal that we just exchanged on without funding fully sort of finalized. I'm heading to Portugal tomorrow to deal with the deal. Everything's deal. I'm heading to Portugal tomorrow to our project down there because I need to sign off on a 300,000 euro glazing order. We're using Core Vision. We went out to tender on quite a few different suppliers and we chose Core Vision Plus in the end, which is a slick, very thin framed glazing system with hidden tracks in the floor that you can tile through. I just always absolutely shit myself when I press the go button on 300k of glass that I'm responsible for making sure fits. And then I am heading to London. I need to check in on a project we have there in Mayfair, and I am going on a panel which is geared towards interior designers and is essentially a discussion about how interior designers can best work with developers. And working with developers is a completely different kettle of fish than working with private clients. It is much more numbers orientated, much more performance based, much more, in my opinion, much more relationship based, much more teamwork focused. And I look forward to chatting with some of my contemporaries and some excellent designers that I'm on the panel with down there. And then I'm going to head back to Copenhagen for the weekend, and I will see you in another video then. Have a banging week. Cheers.